All right, everybody. It is the evening of October 24, Tuesday. We are post Microsoft and post Google. And I thought it would be an apropos time to thumb through the indexes again. And unlike some other times, I actually went through them all to get kind of a sense of where things are at. And there is a theme to this. And I'll just say this to kind of establish the theme because I think it'll be important as we go through these. The theme is that things should go up from here. And that sounds like bad news, and it might be, but there's a silver lining, or a gray lining to that, which is that if they do not ascend really unrelentingly, then something's changed. So it's so important. I'll just express that again with a little bit of a different wording. The charts I look at, it looks to me like this Tuesday was day 2 of a recovery, which might have like 10 days in it. And it should continue. It should keep going up for all kinds of reasons. And I make fun of seasonality, but including seasonality. But I say again, the huge asterisk next to that statement, if for whatever reason things sputter out or start to go south, that is a pretty big deal, because I'll say a third time, things should go up. And you'll see what I mean as I go through these. Because I went through these and I was sort of like, I wish I weren't as short as I am. Although I'm definitely got plenty of cash on the side. So the All World Index shows this nicely. We fell hard, and what happened Monday was completely puny. We actually went lower than before. We went down on the day, and we went up a little bit today, 0.51%. This is not much of a recovery. It would make more sense if it got at least to like this kind of vicinity here, the upper 430s or so, because this is nothing down here. This smells to me kind of like this. And so keep an eye on this stuff. To oversimplify things, if Wednesday is a down day, even a little bit, that's pretty interesting from the bearish perspective. The comp Q, and keep in mind these are cash indexes, so these do not take into account what's going on with Google and Microsoft. Here's the comp Q. We broke support, but did not close below it on Monday, and we ascended today. I'm going to try not to be too repetitious here. I'll shut up in a minute about this, but this is the kind of thing where we should just go higher. This is a puny bounce. This smells like kind of the beginning of a bounce, and not the terminus of it by any stretch. U.S. financials, same idea. Don't want to bore you to tears, so I'll just say it succinctly like that. Kind of just get the interesting ones. Here's the Indu, which was up over 200 points today. That sounds like a nice big deal, but keep in mind we've lost a couple of thousand points in recent weeks. If we do rally, when would it feel safer to get really bearish? Well, around 34.4 would feel crazy safe. I mean, not only would that hit us at the underbelly of that trend line, but it would also be at this price gap. So if, God forbid, we went up the quadruple digits, 1,000 to 1,200 points, getting up to around here, that would be extremely appealing on the short side. As it is now, I feel kind of like, pennies in front of a steamroller kind of situation. Here's the NDX. Same idea. This is the kind of low we saw here and here, both of which were followed by hearty rises. So that's a little disconcerting. OEX, same fashion, got a little bit below support there, but blew it right off. The Russell, this one's really bad. We're way down here. I mean, bear though I may be, this is not like, oh my God, let's short this. I mean, this seems so stretched. Even in the most simplistic sense, if we just sort of map out the past couple of years, like so, clearly on the low side, to say this is obvious would be an understatement. Semiconductor index. I noticed Texas Instruments was getting walloped, but maybe it's pretty minor because nobody seemed to care. NVIDIA looked strong and Intel looked strong after hours, relatively speaking. But same idea. We fell below support here, but it didn't stick. It didn't matter. We started to slip higher. S&P 500. Oh, Tim, we know what you're going to say. Yep. We got below the Fibonacci. We got below this green line. And this is the actual mother of all trend lines. And we started to push higher today. So just as before, I was showing the Indu target, pushing up here to like 43.50. That would be super, super, super safe feeling. That would feel like an opportunity as opposed to, gosh, I hope things work out, fingers crossed kind of thing, which is what I'm feeling right this second. TASI approaching this midline, which has had a very cool supportive effect. Transport's collapsing 1/100% today. So getting back to that trend line would feel better. It would feel safer. It would feel more opportunistic. The utilities went up big today, over 2%. I had no position in any of this stuff, although I've been, on the whole, calling it pretty well lately. I speculated here that even in the event of a downturn, this was such a major low, I wasn't so sure how low it was going to get. And it looks like Monday was about as low as it's going to get for now. Because otherwise we would need to break this blue line, which would be a pretty big deal. The VIX is withered down in the teens again. We're at 18 handle. XE is boring. YAX is boring. XBD is pretty boring. XMI, that's the major market index. Let's draw another horizontal on this one, like so. So, and don't get me wrong, the intermediate term, this still looks great. I mean, this is still lovely looking stuff. It's just that, I won't say it again. XOI, as the tensions in the Middle East have abated, this has gone down 3 days in a row, pretty significantly. And as I'm recording this at this, but not that it matters at all, but I'm recording this at 16:42 Palo Alto time. The ES is down 3 1/4, the NQ is down 31.5, RTY is down like just a fraction of a point. So everything's down a teeny bit. As we zoom in here on the ES, we got quite close to this important 41.86 level. Strong support by way of this enormous bullish pattern here. That's why this day and this day and this day felt so fun and exciting, because they were falling hard and they fell from a place of overboughtness, as it were, back on the 12th. Here's the NQ, which is just kind of stalled out right here. It'll really be interesting to see what happens after the market digests Google and Microsoft, because it was a real mixed bag reaction. Should we break below this, should we close below this blue line, that would really help open the doors up. And then, RTY, this is just a repetition of what we saw with the IWM, just really in the doldrums. And I've got a lot of bank puts now, so it'd be a shame if this thing rocketed higher, but that's kind of why I've been lightening up lately. So just to put a bow on this, here on Tuesday evening, 18 bearish positions, no ETFs at all. I think over 20% cash, I'm pretty sure, something like that, over 20% cash. And the only real, as of now, the only real gotcha that's going to zap me in the morning is Microsoft, because I did get some Microsoft puts today. And so unless something big changes, that will blow up in my face nicely in the morning. But, so it goes. Anyway, I hope this little walkthrough was helpful, and I wish you a good evening, and I will see everybody on Wednesday morning.